The global financial order is quietly being rewritten, not with words, but with gold. For the first time in modern history, a nation is attempting to relink its currency to physical gold. That nation is China, and if this plan succeeds, it could shatter the dominance of the US dollar and reshape global trade forever. Today we'll uncover how China's gold corridor works, why it threatens the dollar's supremacy, and what it means for investors everywhere. Over the last several years, the People's Bank of China has become the world's largest buyer of gold, quietly exchanging US treasuries for bars of pure metal. At the same time, China built the Shanghai Gold Exchange, now the biggest physical gold marketplace on Earth, with new vaults stretching from Shanghai to Hong Kong and across BRICS nations. This network, the Gold Corridor, allows countries holding Chinese yuan to redeem it for gold. In other words, China's currency is being backed by something the dollar lost long ago: trust. Gold can't be frozen, printed, or defaulted on. It's real, tangible, and independent from Western financial systems. For decades, the world trusted the dollar because it was considered the safest asset on Earth. Nearly 70% of all global reserves were once held in US treasuries, but that trust began to crumble in 2022 when the United States froze $300 billion of Russia's reserves. That single act sent a chilling message: your money can be turned off with a keystroke. Emerging nations realized their reserves weren't truly theirs, so they began selling treasuries and buying gold, slowly at first, then at record speed. And China led the charge. Data shows China's gold holdings skyrocketing the moment trade tensions escalated with the US. Officially, Beijing reports around 2,300 tons of gold, but analysts believe the real figure is closer to 5,000 tons when including state banks and sovereign funds. This buildup isn't secretive, it's public and deliberate. It signals to the world, we can de-dollarize, and you can too. Meanwhile, the dollar's share of global reserves has fallen to its lowest point in decades. In 2025, gold was reclassified as a Basel III Tier 1 asset, meaning banks can now count 100% of its value on their balance sheets, just like cash or treasuries. That may sound technical, but it's monumental. For the first time, gold is being treated not merely as a relic, but as a legitimate core reserve asset. The next upgrade on the horizon is even bigger: HQLA, or high-quality liquid asset. If gold reaches that status, banks will be able to lend and borrow against it, unlocking gold's full financial power, and China wants to make that happen. At the BRICS summit, China proposed that its currency, the yuan, could be converted into gold at any time through this new gold corridor. To build global confidence, Beijing decentralized storage across partner nations. Each BRICS member can verify and access its gold locally, solving the trust problem that once doomed similar systems. But China also had to solve volatility. So instead of daily prices, it plans to use a 200-day moving average to set settlement rates, stabilizing gold's value for trade and loans. This transforms gold from a speculative commodity into a predictable monetary foundation. Now imagine how this works in practice. African nations rich in minerals can deposit gold into the Shanghai Gold Exchange. In return, China, through the new development bank, can lend yuan to build infrastructure, ports, power grids, highways. All of it happens outside the IMF and beyond Western control. Gold becomes collateral for development. That's how China extends influence and builds alliances, not with sanctions or dollars, but with bullion. The United States is not blind to this shift. Washington has quietly begun repatriating gold from London back to American soil, preparing for a future where physical custody matters more than digital promises. If gold becomes a true high-quality liquid asset, whoever holds it will wield enormous financial power. Analysts now estimate global institutions may raise their gold reserves from 20 to 30%. That 10% jump equals nearly $2 trillion in new demand, and there's no printing press for gold. Prices could double within 5 years if this shift accelerates. And this contest may also lift Bitcoin and other hard-capped assets. Gold represents trust through time, physical, ancient, and slow. Bitcoin represents trust through energy and math, digital, fast, and borderless. China is betting on the old metal. The US may counter with digital assets. Both systems could coexist, a multipolar era where money itself becomes competitive. For the first time in modern history, nations are openly competing to redefine what money is. Gold-backed or blockchain-backed, both are challenging the paper dollar's reign. The world is moving toward a multi-monetary future, and the race for trust has already begun. This is the next chapter in global finance, and it's written in gold. If this video helped, please like, subscribe to Express EconGeoFinance Insights, and comment your thoughts below.